Good evening. Welcome everyone to a live webinar with Admiral Markets. My name is Chris. Nenad and myself are going to take a look at Trump's policies, President-elect Trump at the moment, impact on the Forex and financial markets in the first 100 days. If you are following Twitter, you can follow Admiral Markets, myself, and Nenad through these Twitter handles. We look forward to having you on board. And there we also mention webinars, which webinars are coming up, and which analysis and content is being released newly. All right, before we get ready with this topic, be aware that this webinar is shown to a global audience, but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more info. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, Nenad and I thank you so much for your attention on that. So today, or tomorrow, actually is a big day because President-elect Donald Trump, will be inaugurated. It's the ceremony, inauguration, and that is the day of the handover of power, as they say, in this case from Barack Obama to Donald Trump in the United States. So what kind of impact will the new president have? The new president is chosen for 4 years, as you probably know, and with it a different political party. Democrats were in power for the last 8 years. Trump has won under the Republican ticket. So what kind of changes can we expect with this upcoming 4 years? So we're going to take a look at these things. We're going to look at global trends, expected policies, and we're going to take a look, of course, at the charts. That's the agenda, the schedule for today. Let's start with the global trends. This is a risk, basically, image. On the left and on the right, you see two main trends. This is according to a source that is Zurich company. Basically, as you can see here, as also written in the image, it's basically the risks are interconnected. No, you can see which risks are interconnected and amplified by the global trends and the impact that it could have on the society. All right, and it says it could be staggering. So according to Zurich, you can see changing climate, increasing polarization of societies on the left. On the right, main trends are aging population and rising income and wealth disparity. So that's according to this source. They think that these four are the main trends for 2017 at this moment. So if looking at this graph, you see also diamonds in the middle. So the bigger the diamond, basically, the more impact, the bigger risk that has on basically the global society, the more impact it could have on society and the more global it could be, the bigger the global trend, basically. So the biggest diamond is profound social instability at this moment, according to them. The second biggest is failure of climate change, mitigation, and adaptation. Excuse me. All right, so let's take a look at some others. You see some crises, unfortunately. You see failure of governance, employment issues, fiscal crises, and a potential interstate conflict. Now, I guess, any given year, some of these things will pop up, probably. I don't have, this table from Zurich for the last 6 years. It could be interesting to see perhaps what the changes were in their thinking. But of course, we've been talking about it as well, Nenad and I, the political sentiment that has been shifting in the West towards maybe a more anti-globalization is something we've discussed as well. We're not the only ones, apparently. Obviously, you can see here Zurich sharing the same thing. They call it profound social instability. And that's when we were talking about 2017 being a potentially volatile year. This is one of the factors that I had in mind. I don't think I mentioned it actually that implicit or that clearly, but that was in my back of mind. I don't think I just formulated it that precisely. That looking at the the politics that is occurring here in the West, it is more volatile, and that could lead to volatility in politics, economics, but also the market. So that's something to be aware of for this year and probably beyond. So yeah, those are, according to them, the major factors. These are the global trends. We're going to have to see, of course, how President-elect at this moment, Trump, is going to interact with these trends. How is he going to handle these issues, and how is he going to have his stamp on these trends and developments? How is he going to shape them, basically? In which direction? With which power? All right. And of course, we're not only talking about the U.S. In this regard. Other countries will have their impact too. But our webinar today is focused on the new president-elect. That's why. So we'll have to see what the populations, what the policies will, how they will impact the polarization and the rising income and wealth disparity. The migration will have an impact on the aging population, and also, of course, environmental policies will have impact on the climate. Maybe not this year directly, but in the future. Here's some other interesting, I thought at least interesting images. This is from the World Economic Forum Global about risk perception. It's a survey from 2016. Now, this might be a bit small for you. I'm not sure how much you can see, but let's go through it together. Basically, these things here that are connected by the blue line are factors. All right, these are the trends, basically. Those are the trends, I should say. The bigger that diamond is, the stronger the trend is, as far as I understood. The diamonds in the middle are the risks that are basically derived from these trends. So the trends exist and they have impact on those risks in the middle. So those diamonds are risk. The bigger the diamond, the more risk. So here basically you can see, we talked about it already in this chart. This was basically a zoomed in version, all right, of a bigger kind of network of risks, a bigger network of trends. All right, so in the middle you'll see profound social instability. You see that here, right? You can see that one here too. You see? So the red are societal risks, orange are geopolitical risks, blue are economic risks, green are environmental risks, and the purple are tech risks, technology. And you can see that this is just a small kind of, let's say, summary or zoomed in version of a bigger picture with other risks involved too. Ones we didn't see on the previous one were deflation. That's a bit small, as you can see. Unmanageable inflation. Those are all smaller ones, which we didn't even see on the previous chart. All right? We just saw a kind of a zoomed in version of the middle. Let's say this core part in the previous one. This, again, is kind of a zoomed in version of this one, where you see the trends. According to this survey, the trends here, the biggest trends are changing climate, rising income and wealth disparity, and the increasing polarization. All right, that influences the profound social instability. So we have to see. It's a volatile mix, but these are just factors that are present, and we don't know in what shape or form they will play out, how they will interact, what will exactly happen. That's something we'll see this year. All right, that's something we'll find out, and we'll be discussing, Nenad and I, of course, all these trends and developments live in our webinars throughout the whole year. Now, regarding to stuff we do know, basically, we could say that with President-elect Trump, it seems that nothing is off limits at this point. Everything is up for discussion, as far as I can tell from my political interpretation. is that it seems like anything should be negotiated and should be improved for U.S. kind of gain. It seems that President-elect Trump will be aiming for negotiating new deals, trying to improve the current arrangements, make it cheaper, make it better, any kind of advantage that is possible. That seems to be the motto. So it seems that past agreements or past alignments, past um, alliances are not totally, unimportant, but it's not a sacred thing. It's not something that's automatic. It seems that even, for instance, the military organization like NATO or the European nation states that have been allies of the U.S., it doesn't seem that that is something that is an automatic, right? And it seems that there's always a constant push for, at least in words, for something of a change. So we'll have to see if that also will be matched with words from tomorrow onwards. Regarding policies and fiscal tax policies, economics and jobs, this is something we've talked about already not so long ago, a bit during our forecast for 2017. But just to summarize, basically, fiscal policies, we could expect an increase of debt. Tax policies will be bullish in the sense that tax money will be given back to the U.S. Citizens. It seems from the stats I've seen that a large part will go towards more the richer part of the society than the middle class, middle income, group. Also, from a economics and jobs point of view, it seems that Trump is going to hammer on getting infrastructure jobs back, manufacturing jobs back, infrastructure investments. So we'll have to see what type of jobs that's going to create, what kind of average income those jobs are going to create, and how that's going to shape up. But this seems to be the direction of the U.S. in the next 4 years, which all in all, Nenad and I expect, therefore, a kind of a short-term boost in 2017. We think that these policies will create some inflation. We'll have to see how much inflation, but we therefore do expect the interest rates to rise in 2017. I'm not sure how many times Nenad thinks the rates could increase. Last year we were very conservative, and justly so, because it was only once. If I remember correctly, I think we actually forecasted once, but I would have to double check that in the webinar of the year ago. For next year, I think my best bet would be 2 rate hikes. All right, let's see if Nenad later on agrees with that. But I think that we could expect one in June and perhaps again in December, roughly speaking. That's my forecast at the moment. And I think that these policies will push that economy forward enough that the Federal Reserve, will feel comfortable in letting go of its monetary fiscal expansion and start to kind of give away kind of its stimulus and start to go more in the background again. Now, the big question in my mind is what kind of effect that will have in the medium term. I think that, from my humble perspective, some of these policies could be difficult. I think that the tax policies will not give enough, stimulate the economy enough to justify the debt increase at this moment. I have some doubts about that. Of course, time will tell, and actions, we'll have to see what the actions are rather than only the words. So that's still up for change. But at this moment, I think that it will create too much debt in comparison to the demand it creates for the economy, the real economy. So that's my view now. I think infrastructure is good. I think that is needed. From my perspective, as what I've read about it, the infrastructure in the U.S. does need overhaul, so that's good. I think that it creates some jobs, but it's not going to, I think, be a job saver either. But granted, that is needed, and it will give a boost. Manufacturing, I think is going to be difficult. I think it's going to be difficult to turn back the clock on this process of manufacturing jobs that have left the U.S. I'm not sure how this is practically going to be done. So from my perspective, difficult, and I'm not sure how this is going to even work out. So I guess we'll have to leave it open and see what the practical implications are of that. The fiscal policy basically will create an increase of the economy, an expansion, but at what cost? The debt will go up, and I think that the debt could go up too fast. Right? So I think there could be a kind of a drag on the economy some time later in this first upcoming 4 years. All right, but that's still far away from now, so let's see how those things play out. In any case, it seems inflation up, interest rates up, as we've already talked about, and one would expect still dollar strength to continue. Now, that has not happened thus far. 2017, we have not seen much USD strength. In fact, last year ended with a lot of USD strength, and so far we haven't seen much of it. Maybe the pound USD, right, did have a decent fall there, but the euro dollar didn't do much in the dollar yen either. So, but these kind of corrections, especially if you're looking at 2-3 weeks, can happen, and there's really not much in if you look at the scale of a year. This image shows the interest rate, basically expectations of the Federal Reserve. You see 2016 ending up here at around between 0.5 and 0.75. That, of course, as we know. So what about this year? So we have 2 members expecting 1. We have 4 members expecting 2 rate hikes. We have 6 members, 3, and then a couple above that. So the average, as you can see, is about 3. So with my 2, I'm a bit just a tad below average, but it's roughly in the same kind of direction. The year after, you can see that there's already a significant spread between the expectations of the Fed board members. Of course, by then the board will be looking different as the length of their term is ending. I think Yellen term ends in 2008, if I remember correctly. But you can see the spread between the interest rates already kind of increasing. Same for 2019. One person even staying very low here, some reaching out all the way to 4%. Now, my point of view, I would expect to be here in 2000, this one, 2017. I do think that 2018 could see a follow-through of that still, because these things sometimes kind of create their own expectations. So I wouldn't be surprised if we see 3 after that in 2018. 1, 2, 3. So I'm about here. But I don't, I know this is already 2-3 years ahead, so this is very, very difficult to forecast, of course. But I'm expecting kind of this trend to happen like this, more flattening here, and maybe even going down like this. So at this moment, I would be on the lower end of 2019. So something like that. That's my current forecast. Well, we'll see. This is too far ahead, and yeah, it's not so important. But here you can, more importantly, is the forecast of the board members from the Fed, and you can see that right here. So concrete steps that we can judge and we can analyze is basically Trump's promise to withdraw from TPP. TPP is the Trans-Pacific Partnership. It would have, as you can see in this image, a combined GDP value of 27 trillion from the IMF, International Monetary Fund. Calculated that it would include the US, Canada, Mexico, North America, basically. It would include Australia, among others, Vietnam, Japan, New Zealand, Chile, and some other countries, Malaysia, as you can see. And I think Peru, if I'm not mistaken. So what is going to happen with this? Well, Trump has promised to basically not rectify it, not join the TPP. He does not want to join this bigger organization. Now, so far, China has had some light criticism, but in fact said also after that those things were discussed that it might even seek to enter the kind of TPP organization. So at this moment, also, if you look at the speech of Chinese president in Davos, Switzerland, the Economic Forum, yearly one, it was interesting actually to hear the Chinese president advocate globalization and global trade and the continuation of these economic partnerships. Whereas Trump is more at this moment, in words at least, showing a more anti vibe towards that. So seems like the roles are a bit different at this moment, let's say, than the historical average of the last 50 years, let's say, roughly. So it's interesting how that has spinned a bit and turned around. All right, so we have to see how that develops. There's a lot of criticism from both sides on TPP. Some say that there's too much power ceded away from the national governments to corporations, for instance. Others say that it's actually an excellent chance for the U.S. to increase its standing and power in the Pacific area. And if the U.S. doesn't do that, China will take that role. This is a complex deal. It took very long to negotiate. I think that honestly, probably there's some good things, probably there's some bad things, right? I think that the truth is probably in the middle there, somewhere in the middle. Depending on your political views as well, you will have different weight or place different importances on some of these aspects. So this is something that is a difficult topic. But most important is that Trump is against it, and let's see if he follows up with his deeds on his words and indeed steps away from this agreed partnership. Other thing that seems to be likely is less financial regulation. Let's see. Maybe a change or the removal of the Dodd-Frank Act. Now, for U.S. traders, Nenad and I think that this might be interesting because there could be more brokers perhaps back in the U.S., maybe less stringent leverage and FIFO rules, first in, first out, for instance, are a few things that topped and popped in our mind and could be beneficial, I think, for traders, right? Less interference with the decisions you make as a trader regarding the broker choice, regarding how you trade. So that is pleasant. If that will happen, we don't know. But this is something we think could happen. It's a trend that could fit within the direction that we think we analyze Trump might go to. So that's something that could be interesting. There could be more reform, of course, impacting other organizations, financial organizations, and banks. We'll have to see. That's really not so interesting for us necessarily from a trader perspective, especially if you're in the U.S., of course. That is the primary thing I think that you're focused on. Outside of the U.S., I think it does not matter that much, but I think a stance where less regulation is occurring on traders, less interference is occurring on traders, could maybe be a trendsetter for the rest of the world as well. So even for traders outside of the U.S., it could be, to some degree, a good development, a positive development, because maybe other countries will kind of follow suit or not go against that trend too strongly. We'll have to see. The UK is thinking about some changes regarding regulations, so that's something that we'll find out very soon, how the UK is handling that bit. And of course the Brexit as well. We heard a Prime Minister from the UK, Theresa May, speaking this week about how the UK will not go for a soft Brexit. They do not want a mixture of basically staying in with one foot in the EU. That is not on the table. That's not going to happen. And from my perspective, May was very clear on that aspect. So we're going to have a lengthy negotiation process starting probably in April. The Article 50 will probably be triggered by March. Probably the UK courts are going to say that the Parliament will have to rectify, will have to make the final decision this month. That means that Parliament will vote on it. Parliament will probably, assumingly, go along with the referendum and not go against its wishes. In that case, the government will rectify Article 50 and exit the EU. The negotiations will start 2 years. Seems long, but is actually short probably for such a negotiation process. We'll start probably in April. And we already know now that the UK is aiming for a full exit. But we'll try to get a trade negotiation deal on the table. So that's something that the UK is facing this year, and the EU, of course, as well. All right, so that was kind of my part, I guess. I'm going to hand it over to Nenad. Let's see also what Nenad thinks about the interest rates. How many times he thinks the rates are going to increase, perhaps in 2017. And Nenad is also going to talk about charts looking at the dollar, for instance.
Yeah, sure. 2 or 3 times. There will be like 2 or 3 times rate hike, in my opinion, Chris. And thank you for a great introduction. I will proceed with the next steps of Trump's policy. Well, guys, there is a lot of questions, and there are a lot of questions that still need to be answered. And tomorrow, as Chris said, is a big day for US and, of course, for the rest of the world to see how new government will actually, we will see. First we have inauguration, then I mean, we all know what Trump was promising, what Trump promised. All in all, I think really that Trump is a bit, he can be a bit isolated from some events regarding some parts of Europe, and what I think is that there are different interest groups that can work for and against Trump. First, I will mention definitely potential corruption and special interest collusion. First of all, you need to know that Trump is not a politician, okay? So he is a businessman. Being politician and businessman is a totally different thing. But we still know that Ronald Reagan, who was also elected as US president, he was also a businessman, he was not a politician, and yet he was, in my opinion, a good president. It does not need to be the case with Trump. We still don't know what he will do. Of course, depending on the part of the world you live in, there are obviously different interests, because as we all know, world is divided, guys. I mean, everyone has their own interests. I am speaking from the point of big forces such as Russia, US, China, and unfortunately now Europe is not in a good shape. Definitely, we all know that. I don't like it, to be honest, personally. I am very pro-European in that sense. I mean, well, it's not in a great shape. So we will see whether US will have strong ally in Europe or not, but some things, as Chris said, are definitely changing. The first thing that the president knew, well, we can say new President Trump, he wants to tackle corruption. And he said that basically tackling corruption and special interest collusion is a top priority for him. Of course, that will include different amendments to the Constitution, and they will include imposing term limits on Congress members. Okay, and definitely it will include bans imposed on White House and congressional officials becoming lobbyists after they leave government service, White House official lobbying on behalf of a foreign government, and definitely it's been happening throughout many years in U.S. that White House officials have been lobbying on behalf of a foreign government. Those interest groups are called caucuses. Also, foreign lobbyists raising money for American elections. I don't think that it might affect the markets directly, but still it will reduce the foreign influence on American politics. So still, as I said, Trump could be a bit of solitary in that position. He can actually put U.S. a little bit isolated from the overall policy that has been governed for during Obama, during Bush, and other Clinton, of course, and other presidents. So there could be a change of the course during Trump. We still don't know long-term effects, but in short-term effects, this step that Trump has provided us with, I mean, this is his top priority, as he said, it should not have a strong impact on markets, in my opinion. This can be definitely very significant from trader perspective of view, because Trump wants to protect the American labor market. Okay, I'm not sure why Trump really is labeling China as a currency market manipulator. To be honest, really, I'm not sure that that is the fact. Okay, because definitely we still don't know the effect of this, because China is not the only country that has a dirty float. Okay, so it's not really the only country. Also, he might renegotiate or completely withdraw from North America Free Trade Agreement, and it will have impact of Canada and Mexico. So if it happens, guys, Canadian dollar and Mexican peso will suffer from a huge impact. I cannot know the size of the impact, but I'm pretty much sure that Canada and Mexico will feel the impact of that kind of policy, or let's say that kind of move. Also, he might lift current restrictions on the oil and the gas industry in the US, which will likely raise oil production in the future. But it can also create jobs in the USA, and we still know that US is at full employment currently, but it might still repatriate jobs to US. So it will reduce their import reliance on oil and gas. Also, there are some talks about UN climate change, and it will cancel billions in payments to the UN climate change programs and invest the savings into more jobs and fixing America's water and environmental infrastructure. Also, I really need to mention that for Trump's policy, I think, I mean, that is not maybe the fact, but I personally think that Trump might allow China to take over South Sea China, okay? He might develop a good relationship with Beijing later, but Trump, in my opinion, despite wanting trade protectionism, he will still, he is a businessman, okay? We all know that. So he will still want to trade, okay? He wants the US to trade more at the table. He wants to bring manufacturing back to USA and jobs, okay? Because his policies are still unknown. We only know some bullet points of his possible policies, what he was talking about. His policies are still unknown, whereas Clinton is a continuation of Obama's policies. So if Clinton had won the elections, we would have had some certainty Okay, so it will not be that, you know, we still need to see what Trump will do. Now we have some sort of, let's say, fear what his policy might bring to the rest of the world. He has no experience in government policies, okay? But he might be okay with foreign diplomacy because he is very interested in trading. He wants to get a better deal for the US. But the implications to that to the rest of the world are still unknown. He has run a huge organization with big success, with less success. Well, of course, as a business, everything has ups and downs, but business is different to government, very different. If he tries to run the policy like a business, he will fail in many aspects. So what I think is he might fail in healthcare, social security, law enforcement. Those bodies that are strictly embodied into government cannot be run like a business. But as I said, he might be okay with foreign diplomacy because he is interested in trading. Now, given the current risk-on sentiment, money has been flooding equities after Trump's dedication to lift fiscal spending and implement tax cuts. Yields have been rising in the US as funds left fixed income for risky assets like equities. There might be a crowding out effect, okay, also lifting borrowing rates in the US when Trump's proposed infrastructure spending on USD of like 500 billions, that's 3% of US GDP. If it takes place, it could be good for the US longer term. Okay? Tax relief, okay? So, well, tax relief, he was talking about it very extensively, but the thing is that the tax relief policy was originally designed to grow the economy 4% per year and create at least 25 million new jobs. But, well, this plan might be too big for Trump's administration at this point. To me, it sounds like a big plan that can bring additional strength in US dollar. But as I said, I'm a little bit suspicious. It's really a big chew to his administration at this point. So we still need to see. Because business rate, according to plan, should be lowered from 35% to 15%. And trillions of dollars of American corporate money overseas could be repatriated at a 10% rate. Okay? The thing with Trump is he wants to do deals. He likes that commercial side of government. So we might maybe expect new deals with big nations, the BRICS, Brazil, Russia, India, China, South Africa, and of course European Union and Pacific nations. Additional thing is he was talking about 1 trillion of investments too, and the thing is the focus is definitely on keeping and creating jobs in the US. Depending on executions and different plans, it could be positive for US dollar strength. I personally expect 2 or 3 rate hikes. Okay, we might see another 2 or 3 rate hikes, and that should bring another part of US dollar strength. Of course, this 1 trillion of potential investment should become over a 10-year period. Okay, it's not, of course, in immediate reaction. So it can come in a 10-year period. Also, what I wanted to say, if China goes into recession, okay, guys, if China goes into recession, which I personally think it won't, it would drag the rest of the world into recession. But it does not necessarily mean that US will go into recession. Okay? You know, guys, I'm not sure how many of you know that currencies usually strength during recession. Because during recession, if loans are written off as bad, it actually destroys the supply of the currency. And because of that, when supply of the currency is destroyed, the currency can strengthen. And usually after stock markets have dropped, national currency gets stronger. It's because cash is pulled out of stocks. It's called money supply and velocity. Okay? We already talked about it. So, as I said, these are some steps that we are currently looking at. I mean, still, guys, as I said at the beginning, those those conflicts or interests are big. Okay. For example, one of the conflicts was Kuwait event. Okay. That the event that was held annually on February 25 was originally scheduled to take place at the Four Seasons Hotel in Georgetown, and after that the location was allegedly changed after members of the Trump organization contacted the country's ambassador, embassy. Also, there were different things with carrier deal, and one of the first major economic moves President had was actually the deal he and Vice President Mike Pence struck with the air conditioner manufacturer Carrier. And it was planned to move approximately 2,000 jobs from Indiana plant to Mexico. So, the thing is that it's being scrutinized now because there is a trade-off between jobs and tax breaks and Trump's idiosyncratic techniques of negotiation. Then additional deal emerged, so definitely there is some special interest in those deals, and definitely it's a conflict of interest. Okay, so what would be expected with dollar, you might ask, as a trader? I personally think, and I'm still thinking, that dollar will actually gain strength during the course of Trump presidency, providing that Trump actually is not, providing that if Trump does not make any move that could actually destroy the image in public. That means every statement he says, every statement he makes will be probably overlooked and looked very closely by most investors. I don't think that investors like to risk in any risk asset, and dollar still is a safe haven. So the only thing I can see dollar really dropping, especially versus yen, that is, it's another safe haven, is actually if US does some critical moves during the reign of Trump. So it's just buy the rumor, guys, sell the fact at this point. So whatever Trump says, it can be buy the rumor, sell the fact. But whatever he does with concrete steps and action, that can actually either hurt or strengthen the dollar. For me, there is no gray. It's only black and white, because he's also, for me, it looks like his policy will be black and white. The good thing is that he will employ people who have actually good relationship with different countries, and US might earn from those relationships. I'm still not sure what will be implied over Russia. In my opinion, as I said, sanctions probably will be lifted during Trump's administration, and at least if he does not lift the sanctions, he at very least might not adhere to these sanctions. If he wants a deal with Putin, any deal, I think he will either need to lift the sanctions or not adhere to the sanctions. Of course, as I said, there are many ways. Okay, sanctions don't have to be lifted. They just could not be implemented. So we still will see what will happen with Trump, with his policy, but definitely dollar is being bought on dips. If you followed yesterday analysis with dollar yen, we had a perfect breakout of wolf wave that exactly hit the target, and we see, guys, this looks like bullish pattern. This is inverted roof. This is inverted roof pattern. So what might we see is actually another bounce. But because tomorrow is inauguration day, there still might be some surprises, but I think that definitely dollar yen is buy on dips scenario. So this was all from us for impact of Trump's policy in his first 100 days. Let's see how the things will develop, but I'm sure in one thing that there will be some definitely some changes in foreign policy, and probably changes in how much his future reports will actually influence other currencies such as dollar Mexican peso or dollar Chinese yuan. On dollar ruble, I was very clear. If sanctions are lifted on Russia, dollar ruble will drop, because dollar will drop, ruble will actually go up. So you see the trend. Let's open daily chart. The trend has been down now on dollar ruble. So what I think is it still might go down should sanctions be lifted versus Russia. You definitely also need to pay special attention to dollar Chinese yuan. At this point, it's in a strong uptrend. But you see, guys, every time something happens during Asia session and during US session, it has a strong impact on either dollar or Chinese yuan. Depending on relation between between Trump and Beijing, definitely there will be moves on this pair. So my plan is also to incorporate dollar yuan analysis in 2017, because I'm sure that this pair, just because of Trump, will be very good to trade. So expect from dollar yuan analysis from me as additional pair to trade. Thank you guys for listening. This webinar is recorded. It will be uploaded. So if you still have any questions, don't hesitate to ask us. And as I always say, we are there for you. So I don't see any questions. Thank you, Nenad and Chris, for all the information. Have a good night. Thank you. Thank you too, guys. Have a great evening. I will see you soon next week, and Chris also with his series of webinars. Cheers, guys, and talk to you soon. Bye for now.